Good morning, investors, and welcome back to the Stock Sense Morning Brief. I'm Malik, and it's Friday, November 14th, 2025. We've got a lot to unpack this morning, following a truly remarkable day at the Pakistan Stock Exchange. Let's dive right in. Yesterday, the KSE 100 index surged dramatically, closing up by an impressive 2,470 points, or about 1.6%, to settle at 160,650. This strong performance built on a modest gain of about 310 points from the day before. Market participation was robust, with nearly 800 million shares traded, amounting to a substantial value of over 35 billion rupees. We saw a healthy breadth in the market, with 285 advancers significantly outnumbering 142 decliners, alongside 50 neutral stocks. Turning our attention to the sectors that drove this movement, cement played a pivotal role, contributing significantly and positively to the market's uplift. The oil and gas exploration sector also had a notable positive impact, pushing the index higher. However, not all sectors were in the green. Automobile assemblers, for instance, exerted a negative pull, dragging the market down. From a technical perspective, looking at the daily charts, the KSE 100 is presenting a mixed picture. While many short-term moving averages are still indicating selling pressure, several longer-term averages suggest a buying trend, implying underlying strength despite recent volatility. For key levels to watch, the classic pivot point stands at around 162,650. Above this, resistance can be found near 168,970, while support levels are around 155,300. These levels will be crucial for understanding the market's direction in the coming days. On the corporate front, investors should keep an eye on TPL Properties Limited, which has 2 board meetings scheduled for today. These meetings will cover their first quarterly accounts for the period ended September 30, 2025, as well as their annual accounts for the year ended June 30, 2025. There are no specific last day entitlements or dividend announcements to note for today. Now, let's move to the economic and market news, which presents quite a dichotomy. A major positive catalyst for yesterday's market surge was the announcement that the International Monetary Fund's Executive Board will meet on December 8th to deliberate the final approval for the next $1.2 billion tranche. This news significantly boosted investor confidence, signaling improved economic stability. Further positive news came with the advancement of a Pakistan-China cross-border exchange-traded fund plan, which holds potential to increase foreign investment and liquidity on the PSX. However, amidst this optimism, we also saw a flurry of concerning developments. President Zardari gave his assent to the highly contentious 27th constitutional amendment, leading to significant political and institutional instability. This was quickly followed by the resignation of 2 senior Supreme Court justices, Mansoor Ali Shah and Athar Manala, in protest, further deepening concerns about judicial independence. Predictably, the newly enacted amendment has already been challenged in the Supreme Court, ensuring prolonged legal and political uncertainty. Adding to the instability, the Pakistani Taliban claimed responsibility for a suicide blast in Islamabad, raising security concerns. The defense minister's statement about not ruling out attacks on terrorist sanctuaries in Afghanistan signals a potential escalation of cross-border military action, which would increase geopolitical risks. On the economic front, Pakistan's trade deficit widened to about $26.35 billion due to surging imports, putting pressure on foreign exchange reserves. We also learned that Gillette Pakistan is seeking delisting from the PSX and winding down its local manufacturing, a move by its parent company P&G to shift to a distributor model, which could be seen as a negative signal about the local business environment. Lastly, a prominent textile firm temporarily shut down its spinning unit, citing unfavorable market conditions, reflecting broader challenges in a crucial export sector. Regarding institutional flows, yesterday saw foreign institutional investors, or FIP, as net sellers, offloading about $2.3 million from the market. Conversely, local institutional investors, LIP, were net buyers, injecting roughly the same amount. Among local categories, banks and companies were notable net buyers, while individuals and foreign corporates were net sellers. My take on yesterday's market action is that despite a wave of significant negative political, security, and macroeconomic news, the market demonstrated remarkable resilience. The strong rally, primarily fueled by the positive IMF announcement and activity in key sectors like cement, suggests that investors are keenly focused on immediate financial catalysts and external funding assurances. However, the underlying institutional instability, security challenges, and widening trade deficit remain crucial long-term concerns that warrant careful monitoring. While the market found reasons to cheer yesterday, the broader landscape remains complex. And that wraps up your Stock Sense morning brief for today. Thank you for tuning in. I'm Malik, and I'll be back tomorrow with more updates. Until then, make informed decisions and have a profitable day.